Any fool can buy high and sell low. The wise man knows it's all in the timing. My friends, good to be back after a week hiatus. You know, we've not taken a week off in 10 plus years since we've been doing the show. But we did this time. I was traveling overseas and I was like, I'm not going to screw up my whole vacation, which I do every single time by getting this show out every day. And of course, the only time we've missed the show, I think one time I was stuck in the Pacific somewhere and could not get a satellite signal to upload the show. And then of course, during COVID, I got the D whatever it was variant and it just knocked me out. And I think I missed a day or two. But it was good to have 5 days off. We are back. Let's jump into these charts. We see stocks are mixed for the day. Bonds and gold are up. Bitcoin is down. Gold's up big time. And let's jump into these charts and see where we are. We look at the S&P 500 and we can see again where things over the last week moving up nicely. Today up just a little bit, 0.40%. And I'll tell you what we are seeing as far as our analysis goes, and this is interesting. The backtest accuracy, we see historically on the S&P that Heikin-Ashi reversals after a strong uptrend on the weekly chart followed by a 195-minute down candle confirmation have a 75% success rate for a bearish move within 5 days. Now, we can see where things popped up in the morning, pulled back some in the afternoon. What are we looking for in order to jump in? Well, of course, you would want a red Heikin-Ashi candle on the 195-minute chart with increasing volume. We see a 70% bearish down move over the next 5 days in the directional probability and a 75% backtest accuracy. So I want you to hear what I'm saying. Not saying that you just go pull the trigger in the morning on a practice trade going down, that what you look for is if indeed you see the chart starting to lay down red down candles on the 195-minute chart, you can expect to move in upwards of maybe even up to almost $30 in a pullback. But you're going to have to see a red down candle forming, which is typically what we see after a run-up. We see a pullback. What's happening there? People are taking profits. Now, maybe the chart will just turn around and keep firing up. If it takes off again after slowing down, then of course that didn't happen. We didn't do that, and we didn't jump into a down move. But if you see red down candles forming on the Heikin-Ashi 195-minute chart, that's our bottom chart, then you need to be ready to pull the trigger in a down trade. Now you might say, why would I buy something when it's going down? If you're very new to the channel, well, that's because we have something like SH or puts. SH is what? It's the inverse of the S&P 500. It's put out by ProShares, managed by them, and it is a single inverse. If you don't know what an inverse fund is, I'll put it at the end of today's program, inverse funds, how to make money when markets crash. So let's move from the S&P to the NASDAQ. Pretty much the same, although our probability is less, 65%. It's a little more than a coin toss, not good enough for me. And again, around a $30 move, 75% back test accuracy. So keep your eye on that as things move along. If you see some red down candles laying down, I jump first into the S&P. The odds are higher. Now, let's move on to 20-year U.S. government bonds. Where are we there? Well, we have the same kind of thing happening. We'll keep an eye on things after this up move, see if things are going to at some point be pulling over, moving down. We really don't have a jumping in point, but if we do see things pull back some, we will take potentially advantage of that. Not a lot of directional probability. It's a little bit more than a toss-up. In fact, it's decreasing every time. S&P 70%, NASDAQ 65%, bonds 60% bearish, 65% backtest accuracy, a move of about $2 possible. I can only tell you that after 3 weeks of a down movement, again, all that movement was covered in that first week of things plunging down in bonds. and then just sort of backed it up, but didn't go any lower, and now things moving around. I'm hopeful bonds are going to, of course, go positive, but we've got to have more happening here before we're going to see that in fruition. So we'll keep an eye on things and see where they go now. Of course, the bullishness that you have seen from us lately on gold continues. 80% bullishness, gold up 1.42% for the day. That's beautiful. Expect another potential of $11.74 up move in gold. Again, might see a little bit of a pullback to 308.26. That'd be our jumping in point. 85% back test accuracy. So keep your eye on gold. The Heikin Ashi uptrend on the 1-week chart with the 195-minute green candle confirmation, we see as having a back test accuracy of 85%. That's quite beautiful and quite nice. Lastly, we will go to HODL. We are bearish on that, down for the day. You can see again where it's run up over the last week or so. Popped up nicely on Friday and then pulling back some. And again, same kind of thing that we saw before. The broader trend is bearish after reversal. Short-term signals suggest a bounce before the downtrend continues. So we will keep an eye on it. Our backtest accuracy for HODL is Heikin Ashi reversals on the 1-week chart after 195-minute confirmation have a 75% success rate, and we are 70% bearish. So keep your eye on things. If you see this continue with decent volume, red down candles, you might go short. You say, Tom, how do we go short on Bitcoin? Here is a short fund for you, a single short. And typically you can see right now is when the market closed only 6 cents apart between the bid and the ask. What does that tell you? It's very liquid, and that's nice. I don't jump into illiquid funds, inverses or not, but keep your eye on that. Might give you an opportunity to practice trade that if indeed we do see that pullback after 3 weeks of nice building up movement. Might have a short-term pullback. We'll keep an eye on Bitcoin, but it's good to see it, particularly with all that volume last week spiking up. Now, that is where we are. We're great. We're happy to be back with you. It's great to have you with us. We always love to hear from you. CW@chartingwealth.com. God bless my friends. All the best from the whole team at Charting Wealth. And also check out that training on inverse funds. It's right here